Okay, good day, everybody. Still here for the Daily Market Pulse. This is for Monday, September 22nd. We saw stocks, indexes, markets sell off quite broadly. Volume was lower. Now, that was lower because it was options expiration on Friday, so volume was huge on that day. So maybe a little bit of an asterisk. The fact that we may not necessarily add distribution days almost feels like we should, but we aren't and haven't. Thus, we may make an adjustment as the week goes on, especially if things look uglier. We'll just assume it was and we'll maybe add to it, as that will just make it that much more cautious at that point. Dow Jones, you can see evening star formation now developed off the 17,300 level right back to the polarity. So we're looking for this at the 8 and the 20 and this polarity to hold. We'll see if that's the case, as the Dow Jones actually still looks okay at this potential support area. The S&P a little bit weaker. It's already broken down below, but the support area, or at least the polarity, is right where the Bollinger Band is on the bottom side there near 1990. We're looking for support there and the possibility of a bounce. The NASDAQ does not have an evening star formation. It tagged the upper Bollinger Band with a gap up on Friday and then faded even further again today into the lower Bollinger Band with room into 4,500. That's where we're looking for support next on the NASDAQ. TSX, if you recall, had a little hot on me on Thursday. Friday sold off, and then today breaking aggressively lower beneath at least what was somewhat of a pivot area at one point or another at one time. So it's outside of the channel now as of Friday, and shooting lower toward the support levels near 15,000. So we're looking for that area to be support. Let me draw that in so that we have that as a reference point. Let me use this into here essentially. This is what we're looking for right now, right in there, actually, right there. So that's the area we're looking for support right now. It's oversold as well. So let's see if they bounce, come back up toward the moving averages near 15.5 or not. Let's jump over to the US dollar, Canadian dollar. The market's down. Typically, the dollar gets stronger. So it's coming into a support area across 109. It's sure enough, it's flushed briefly through, hit the 50, bounce right away. Went green back toward 109.75, and so we're still looking for this to kind of stabilize and looking to round off, come back toward perhaps toward 110. That may mean markets do in fact sell off if they're not able to hold these levels on the dollar. Euro US dropped into a support area right now. It's flushed a little bit lower and coming back to a slight little bounce here on the intraday that I've noticed thus far. Treasuries bounced off the area of 135 back toward 137. That was our target. Moving averages directly above. Let's see what they do here. They can either flush right on through and higher, which means the markets are likely going lower, or this in fact finds resistance across these moving averages and the 137 polarity, and we're going to see a lower move back toward 135. The market's finally bouncing and stabilizing. Japanese yen continues to sell off further and further and further. Every time it looks like it's stabilizing, it doesn't. The lower shadow on Friday seemed to be slowing things down. Sure enough, we have a bullish engulfing, not of great magnitude, but nonetheless. Bullish engulfing nonetheless. And a divergence currently on the stochastic, so I'm looking for a move back toward 93.50 for the Japanese yen. Gold continues to show signs of weakness. At least it's trying to stabilize near 12.10 to 12.20. Positive divergence here as well, looking for a move to 12.40, and if they can break that, then 12.80 to the upside. Silver has a hammer that was formed today. Big flush to the downside on the lower shadow, bouncing back up toward $18. Again, positive divergence. There's your hammer. It's still in red territory, but nonetheless, you have a good, decent hammer there formed with a positive divergence. So we're looking for a move back toward 18.50 and then eventually 19. Let's go over to crude. Back down to 91 and 90.50, retesting the levels of support of the bull sash and the lower shadow from 2 days after that. It's now or never, lower channel, or at least lower pennant formation. There's the weekly. The dark blue lines you see as a pennant formation dating back a while. So it's come all the way back into that area and looking to possibly find support and bounce back up toward 91, actually eventually to 93, 95, maybe higher, but right now needs support here. Otherwise, it's flushing right on through. Small caps were never all that strong, even though the Dow was strong, the S&P and Nasdaq seemed reasonably strong. Small caps never were, so that might have been a clue that buyers were not all that serious to begin with. It was stuck in a channel. It was never really getting up and over the moving averages, nor was it making new highs, as the S&P and Dow did, and Nasdaq included. Falling window today, breaking through the small channel. Back towards support levels near 112, and then levels below that will be 110 to 111. So there's still a possible flush down to that area, and then an immediate bounce once again on the small caps. And then we've got the VIX bouncing and gapping higher in a rising window, as we just saw the falling window on the small caps. Back toward 14 as an initial, and 1450 as our target. After that, we're looking at 15 to 1550, where there is a window that we'll be looking for as a target up here. In fact, let me do that, and I'm going to extend it out a little bit further, and then I'm going to change its color so that we can identify that that will be the target on the way up. I like my crimson. It's not my color of choice, it's simply the color. So there's a window that's already been stuck at, which is right here at the 14 to 14.15. Next one after that into 15.50. So it's got two levels of resistance targets to strike on the way up, which could certainly slow it down, allowing the markets to then reverse and go higher once again. Let's see what they do.